We are now live. All right, I think we should be good to go. But one quick thing. Okay, guys. All right, we're good to go. Welcome to the Ultimate Trader Workshop Part 2. This has been highly requested, highly in demand. This is me and Blake from Trace Trader. Before we get into anything, a couple house rules. Number one, if you are not unmuted right now, you need to stay muted throughout the whole course of this presentation. At the end of the presentation, we will unmute everybody and allow you to have questions. We can answer whatever question you want to ask. I ask that you save your questions to the end. But let's go ahead and jump into this. But before we jump into it, who am I? Why you should listen to me? Why you should listen to a word I say? I've been trading for 9 years, 7 back-to-back green years. So it really took me 2 years of constant losing, banging my head and stepping on my own foot to really get into this. I'm a former proprietary trader from 7 Points Capital. I'm also an ex-financial advisor with Merrill Lynch. I'm the leader of Juicy Trades trading community, and I'm known for the 5K to 100K run in 2017. 2018 and 2019 up over 100%, and this year has been a gift besides the last 2 months. Right, the last 2 months has been crap, but before that, it was a complete gift. So I'm up 923% on the year currently. Blake, you there? Hold on, is he muted? Blake, you should be good.
All right. Appreciate it.
Yeah.
Thanks, Tex. All right. So yeah, same thing, why should you listen to me? First off, thanks for hopping on this. I know it's a Sunday. We're going to try to keep this short and sweet, get you guys the best information that we can in the, least amount of time that we feel is appropriate for what we want to get across today. So same thing, why should you listen to me? I'm Blake. I'm the founder of Trade Tracer. I'm educating traders around the world on my personal rules to trade. Been a trader for over 10 years. Was a former financial advisor, had my Series 7, 66, multiple licenses, but kind of got out of that because it didn't give me the flexibility of trading, and wealth management is all about gathering assets. And I didn't like selling that aspect of it. I was more of a trader and found out that that wasn't the route that I wanted to go. Wound up leading me to opening my own advisory firm so I could make those decisions on my own, because the market was my passion. I've been consistently profitable for the past 7 years and running. And my trading philosophy is always manage your risk and ride the trends.
So on the docket today, a couple of things we want to go ahead and point out. One, we're going to break down the trading outlook and what that is. We'll go over trading philosophy, FOMO, which is the red killer of most, at least that was for me in the beginning, and tell you how to beat it. Also, we want to go over red trades. Everybody, every guru only focuses on the green. They don't tell you about the red, and I'm going to tell you all about it. I'm going to tell you how to trade with less, so how you should be trading on a small account. And then we're going to introduce to you guys, this is a review for my team, what we call a corrective action, keep you in line with your trading plan. Then Blake's going to go over a couple things. One, the perfect trader, and then the 6 essentials you guys need to have success in your trading.
So let's kick it off with the perfect trader. What does the perfect trader look like? And a lot of people will, when they first start trading, the first thing that they'll do is they'll try to gather as much information as they possibly can. They'll go read all the books, they'll watch all the videos they can, and try to gather as much knowledge as possible. The problem with that is 99% of the information out there is all technical analysis or fundamental analysis related. And nobody really tells you, what does your mindset need to be? So that's what we're going to talk about in this slide, is preparing the mind. So how do I personally prepare my mind? Is I meditate. I highly, highly recommend meditating before the market opens. Market's already opening early in the day. You're kind of waking up depending on what time you get up. And it's a good time when your brain is in that frequency to go ahead and start your meditation and clear your mind. For me personally, this is essential. If you're coming into your trading day and you're already anxious, you're already stressed out because of what you've got going on in your life, that's going to have a direct correlation on your trading decisions when you're trading that day. I guarantee it. We're human, okay? We're not perfect. So clearing the mind is essential. And for me, it's meditation. It can be whatever it is for you, whether it's whatever it is, but clearing the mind is essential. one thing that you need to understand is that you're not playing against the market. When we're trading, a lot of the times we talk about they, or, whoever the market makers are, and we're always referring to they. And one thing we need to understand is we're not trading against anybody but ourselves. Who we're really trading against is our own bad habits. So that's one thing to be clear with you is we are trying to master ourselves. So you have to master yourself before you can master the market or anything. And this is a universal truth. For an example, we're talking about health and fitness. If you're wanting to be, a bodybuilder, or you just want to be in great shape and good health, well, it's going to take some discipline to take care of your body and to feed your body and fuel your body the foods that it wants in order to achieve those goals. It takes discipline to do those things. And if you don't have the discipline to do something as simple as, keeping up with your health or keeping up with your wellness or doing something, for a loved one, then you certainly cannot expect yourself to be disciplined enough to master the markets and master your trading plan. So continuing on about this perfect trader, we're talking about a mindset here. We're not even talking about technical analysis or price entries or exits, because before we can even start thinking about that kind of stuff, you need to come into it with the right mindset. And so this is one of my favorite quotes from Bruce Lee. I've kind of, trimmed it down a little bit, but he says, empty your mind, be formless, be like water. And so what he means by this, and this can be, a quote that can have an application throughout many aspects of life. But for me personally, it's very close to my trading and my trading style. And so first off, we have to empty our mind. This is my meditation. You got to have a clear mind. You got to be adaptable, being formless. That's what he's talking about, being formless, be like water. You pour a glass, you pour water into a cup, it becomes the cup. You pour water into a bowl, it becomes the bowl. It's formless, it adapts. So being able to adapt to market conditions and not succumb to opinions, right? And then finally, the last quote over here is be like water. And so he goes on to say, talks about water, water, it can be crashing and, break apart rocks, but it can also be smooth and gentle and, flow like a river. And so that's part of, when it comes to trading, that's part of time to be aggressive, water's crashing, time to be aggressive, or time to be passive, time to sit in cash, relax a little bit. Okay. So this quote has helped me a lot in my trading. Empty your mind, be formless, be like water. All right. So the next bullet point here we have is the perfect trader, in my opinion, is truly an artist. He is not a technician. The perfect trader is creative. All right. There's no system out there that is going to work 100% of the time. There's no algorithm that you can just type into your TOS system and it's going to print money for you every single day. It just doesn't exist. There's too many variables, and those things do not exist. If it did exist, everybody would be wealthy. Everybody would be a millionaire. All right. So I say the trader is an artist and not purely a technician, because you have to be able to feel the flow of the market. This is something that's developed over time. This is something that's developed putting hours and hours of work trading and multiple hours of chart study. Another thing that we need to understand is that there's going to be periods in a trade where they shake the tree. What I call shake the tree is when we get some volatility and they're trying to shake out weak hands. And you have to have the discipline to understand that if it hasn't violated your price rules or it hasn't violated trend or whatever system that you're trading, if you see one red candle, you shouldn't just automatically panic and get out of your trade. As long as it's still working, within your trading plan, you got to have the discipline and the perseverance to move past that and trade price and not trade your P&L. So for me, in my opinion, and I've been doing this for a long time, I've seen a lot of traders come and go. Trading has to be a passion. Trading must be a passion. If you're going to make this more than just a hobby, more than just something that you like to dabble in, and you really want to go at it and say, okay, I want to be, one of the top guys, and I want to be able to consistently extract money out of the market, this has to become a passion of yours. If you're in this to get profit alone, if you're in this just to make money, my advice to you is quit right now while the market hasn't taken all your money, because it will. Okay. Profits for me are a side effect of my passion. Money is not my passion. Money does not give me any joy except for the things that I can do with money. But my passion is trading, and as a result, I see that in my P&L, and I see that in my accounts growing. You're playing against the best in the world here. And this is why I say this has got to be a passion. Okay. You're playing on a stage, you're playing a game on a stage against the best traders in the world. You're playing against the LeBron James of the world. You're playing against the Tom Brady's of the world. Okay. And if you want to play on the same playing field as they are and you want to be in the pros, you got to be prepared, which means you got to study, you got to have focus and a multitude of other things. But most importantly, this has to become a passion of yours. Otherwise, you won't last. So if you want to win, you got to dedicate your life to this, because that's literally what it's going to take. Xavier and myself, we've been doing this a long time. We do a lot of webinars, we do a lot of things. And I think it's very clear, if you follow us on Twitter or YouTube or whatever, that trading is a passion for both of us. Okay. This is something that we love to do. And it's not because of the money, it's because we love the markets. So every trade must be carefully planned. Every single trade. And this is one of the things that Xavier is really good at, is only taking A+ trades. And we have a system where we have a grade your trade system. But I like to only take 8, 9, and 10 star trades. Okay. So those are the types of trades that I like to take. And every single trade has to be planned carefully. And when I say no cowboy trading is simply trading because you're bored. Cowboy trading because, oh, I think this is at a resistance level, I'm going to go ahead and short here, even though the market's in an uptrend. Cowboy trading is just doing stupid things because you want to be trading, because you think, oh, I'm going to get it right here. And you're not thinking far enough in advance as to your exit strategy. So that's the next point here, is before you get into any single trade, you have to literally visualize your exit prior to your entry. And when I say you have to visualize it, I mean, you literally have to think, okay, if this goes sideways, what am I going to do? If this goes up right away, what am I going to do? If this goes up in bull flags, what am I going to do next? Am I going to add? Am I going to sell? Or what if this immediately goes against me? Do I have my stop in? What about a stop loss? Do I have a trailing stop set? These are all things that you need to take into consideration before you enter your trade. So no cowboy trading. Every trade must be carefully planned, because guys, we're playing against the best in the world. And like I said, if you want to win, if you want to beat LeBron, if you want to beat Brady, you're going to have to come with your A game, and you're going to have to really think out and plan your trade.
So this is where I come in. This is Xavier again, guys. Keeping your mind in check is the number one thing you can do. Trading is just literally all trading is. It's a consistent battle between your mindset and your emotions. And most people can't win that battle because we're so attached to our emotions. You must master the art of sitting on your hands. And I find that for new traders, this is the hardest thing that's for them to learn. You can't sit on your hands. Majority of traders are cash for a very short period of time. This year, I've probably been cash the majority of the time. I'm up 900%. Majority of the time, I'm cash. Cash is a position. Do not be in a rush for you guys to make money. Trading's fun. And when you're right, it's the best thing in the world. I'm telling you, if you guys can get long something crazy risky like Tesla and it runs $30 in your favor, I'm telling you, that's the most euphoric feeling in the world. But at the end of the day, you can't get that every day. So you don't need to be in a rush to make money, but you need to be in a rush to follow your trading process. Don't have to trade every day. I'm gonna say this so many times today, it's not even gonna be fun. I'm gonna drill this in everybody's head. You do not have to trade every day. All right. You do not always have to be in a position. Cash is a position. Now, the other thing that new traders really mess up on is because they think they have to always be in a position. They always focus on the short-term fluctuation of their P&L. And in reality, it's just noise. The week goes by, you take 10 trades in that week, you lost on those first 2 trades on that day. A lot of traders are completely messed up in the head because they're so focused on that short-term gain. You need to look at the long term. As a trader, you're not to judge yourself or to be judged on your short-term, meaning the day-by-day performance. You are to judge yourself over the longer-term performance, month by month. You see, when you start focusing day by day, you create this impatient process of thinking with your trading. All right. Just know if you start judging yourself month over month, it'll give you relax that relaxable so you can just be chilling and you can relax. You don't have to force any type of trade. I want you to literally think of every trade as a building block. You're building a house. Your goal is your house. You have 5K, you want to make 100K. That 100K is your goal, that's your house. And each trade you take is a brick that you're building that house for, which will lead me to my trading philosophy. Everybody here needs to adopt a trading philosophy. A trading philosophy is just something that you create to keep your perspective in line. Okay. Your perspective will change as you see how others trade on social media. If you make, let's say you deployed a system here, if you look to the left, $500 a day is over 126K a year. You make $500 a day, you have killed corporate America. Majority of people in corporate America only make $60,000. You're making $500 a day for 120 plus K a year. And you have this profitable trading system, but when you go on Twitter and you see Billy Bob or whoever it is who bought some crazy risky asset, he made 6,000% on that one trade. What happens is you stop doing what you're doing. You get rid of this $500 a day trading system that's going to give you 120K and give you financial freedom to try to chase what Billy Bob's doing. And you don't understand that process, nor do you know that process is effective. So my trading philosophy that I adopt, and I still say it today, $300 a day will keep the job away. If you can seriously make $300 a day while you're working, you can successfully build a $75,000 account, which will give you the capital you need to generate more money. So keep the trading philosophy in line. And I want you to know that trade by trade is how you will build your bigger account. Your objective should be trade by trade. All of your trading should be treated as a business. What does a business do? A business comes to work, they have a profitable process, they repeat that process, and they go home, go to sleep, and come back and do the same thing they did yesterday because that's what makes them money. Your goal is to apply, your objective is to apply your trading plan when you can, and when you cannot, you take that day off. My team members know 12 o'clock comes around, I'm not in trade, I'm out. I'm not staying around for that day. I'll see you later. Your goal is not to get rich trading in the short term. That one trade, that's not how you're going to get there. Your job is to get rich over the long term by following your plan and executing a series of profitable trades. Know that you will win by repetition. And I'm going to show you, the big thing about me is that all my trades look the same. All of them look the same. Here, if you look over here to the left, this big first trade, that's Tesla. Entry, exit. The other trade right here, I think this is Zoom, entry, exit. I can do this all day. All my trades are the same. That's how you win. I want you guys to write down two things. Consistency, repetition is how you will become a millionaire. Now that you know this, your emotions, as me and Blake were just saying, is what's going to cause you to shoot yourself in the foot. And the biggest thing that I can help you out guys with is getting rid of the biggest emotion killer, which is FOMO. FOMO will mess your account up. FOMO will destroy you. I've blown 2 accounts up just off FOMO. FOMO stands for the fear of missing out, and it's natural, right? Most traders, this is basically when most traders and non-profitable traders suffer from this. It happens when a stock or asset, let's say Zoom, is making this crazy move like it just did, right? And instead of you following your rules, you say to yourself, look, I'm gonna throw everything I know out the window because this move is gonna happen, and therefore I'm just gonna go ahead and buy randomly. It happens so much. Tesla's running is up 7% at open, so you go ahead and buy. You need to look at the chart. You just bought because it was up. It happens so much and it kills so many traders. Now, how can you beat it? Number one, have a stable income that will at least pay the bills. I did a statistic. This is a true story. 70% of all traders that are not institutional are part-time traders. Say it again. 70% of traders have a different source of income. And when that happens is you want to trade full time and leave whatever it is that you're doing to generate income. And that's the goal. That's what you want. I want that for you. But at the end of the day, you need to understand you need to pay the bills. Because if you need your trading money to pay the bills, you will end up doing a lot of mistakes to try to meet that monthly goal. So have some type of income coming in, keep your mind stable. In times of FOMO, please stay away from stock twits and fin twit because that would just make you do something random. Review your trading rules every day, and if you can't, that doesn't help. You need to walk away for a week. Trust me, there's times in this market right now, especially right now, I kind of want to walk away when the market is not giving much, and then something random happens and it's just up, and your trading plan don't allow you to get into that trade. You need to walk away from that kind of market because it's going to entice you to buy. And the biggest secret I can give you guys to beat FOMO is when trading. And I don't listen. I'm pretty sure everybody does this. When you guys get into a position, and if you're trading, how many people lean over in their chair and they got their face directly right at the screen because they're watching every candle go up and up and up? Number one, I need you guys to have a one hand on the wheel kind of approach, especially in choppy markets. So what I recommend for people is have some type of side hobby they can do while they're trading. You got an Xbox, you can strap it up to another screen, have your computer right there, whatever it may be. But have some type of hobby to keep you disconnected in a way from the market, because when you're just so focused on that one trade, every tick will emotionally cause you to do something, whether it's buy, sell early, jump into a trade, whatever it may be. Just have a one hand on the wheel approach. Now, how can you never get FOMO? There's going to be a point of everybody's career when you get to the point where you're a professional trader. And in professional traders, do not care about the moves. We are focused on only the trades that match our trading plan. As a pro trader, well, a pro trader does not care about random runs, random drops. If our trading plan does not allow us to get in that trade, we won't get in that trade. So Amazon, Tesla, Beyond are randomly running. This is the secret to beat FOMO, and I want everybody to write this down, okay? Amazon, Tesla, Beyond, they're running at open. You need to ask yourself, where is my entry? I physically want you to seriously say that. Where is my entry? When that stock's running straight up in this parabolic mode, and you say to yourself, where's your entry? You say to yourself, this doesn't line up with my plan. Yeah, it's running, but I can't get in because it doesn't line up with my plan. That will stop you from shooting yourself in the foot. I promise you. You don't have to get every move. All you guys got to do is just manage the risk. All right. It's Blake.
So yeah, I just want to reiterate what Juicy just said. Biggest thing is manage the risk, right? So welcome to the most difficult game ever created. And when I say that, I truly mean that. Trading is a game that is extremely difficult. And like I've said before, traders were artists. You're allowed to express yourselves with unlimited creativity. There's no rules to this game other than your trading hours and the capital requirements if you're trading on margin. Other than that, it's literally open for however you want to play it. There's no out of bounds. There's no referees. There's no rules. So this is what gets a lot of people in trouble because our entire lives, we were given rules. When we're in first grade, we have a line leader. Why do we have a line leader? To create rules for little kids so they're not acting out. You got to get in line. You got to get in line. You got to get in line, right? So we're conditioned as humans to always stay in our boundaries, always stay in our lane. And then when we get the creativity and the freedom to go trade in the markets, you're given unlimited creativity to express your position in the market. And that's what I think is probably one of my favorite aspects of trading. So the market just is, it's up to you how you want to play it, right? So this gives the ultimate creativity to the trader. You can choose your strategy, right? You got to figure out, okay, am I going to be a buy and hold investor? You got to pick your investment time horizon. Am I going to be a swing trader that holds trades for, a week to multiple weeks? And you got to figure out your risk profile. You got to figure out, am I the type of person that when the market dips, 20%, am I buying there? Or am I the type of person that I'm scared that it's dropped 20% and I'm probably going to sell there because I don't know if it's going to keep selling. So you need to figure out your risk profile. And then you also, one of the things that is the most important thing is you decide when you buy, you decide how much you buy, you decide how long you hold that purchase, and then you ultimately decide when you sell. And there's so many variations to that sequence that just that sequence alone could give the trader so much creativity and flexibility in how they want to position their trade or scale into a trade or scale out of a trade. It's really pretty cool. So this is one of the things that when you're new to trading and you're trying to define your system, as a new trader, I know these are things that I didn't even think of because I didn't know it existed. I literally was completely oblivious to it, which is, why I had my growing pains in the beginning as well, and why Xavier and I are trying to pass on this knowledge so you guys don't have to go through the same struggles that we went through, and maybe we can, save you 2 years along your journey. So these are all things that you got to be thinking about when you're getting into this game. And even if you've been in this game for a while, maybe you still haven't fine tuned it. Maybe some months are profitable and some other months aren't. So these are things that, come back to the drawing board, come back to the fundamentals, figure out what works for you. So this, in my opinion, is why the trader is an artist. Like I said many times, you get to express your viewpoints in the market with your position. So am I bullish? Am I bearish? How bullish am I? Am I 100% plus leverage long? Have I been holding for 2 weeks? Have already scaled out half of my position? So there's a lot of creativity and flexibility in the system that we implement over at Trade Tracer. So that's welcome to the most difficult game, guys.
Extremely difficult. And just sorry about that. That's my fault. Just to go ahead and tag along with that, one of the most difficult um, aspects of trading is waiting and following your plan. Just know there's three things the market's going to do. The market's either going to run up, it's going to go sideways, or it's going to come back down. Your job as a trader is to apply your trading plan and profit from the piece of that move. Don't try to trade in my opinion, in the way we trade. We don't try to trade the open because there's no candlesticks there. You haven't got a sentiment feel for the market. You're basically just throwing money into the wind at that point if you try and trade the open. The best thing you can do as a trader is let the market come to you by waiting for your plan and your setups. Now, in the beginning, most traders, they try to buy it here and then they try to sell it there, right? That's what they want. So if they got in around here and then they sold right there, they're upset. Oh my God, it pulled back. I should have held longer. That's not what a professional trader does. If I'm a pullback trader and I buy dips, I know it started here, it ran up. I didn't let FOMO get me. Instead, I waited for this to pull back and I got in here, right? And I got out somewhere up here. And that's it. I didn't get from there to there. I got from here to here, and I did it safely with a process. And that's what trading is, coming back and finding that process and going with it and following it. And the markets are moving and your plan doesn't allow you, meaning that this is going up, 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 and it doesn't pull back, you don't get in the trade. Okay? What you guys need to understand about trading is that your primary focus in trading is to take 100% A plus trades, right? 1,000% trades. And you do that by focusing on your process. It's not to make money. As Blake just said before, all of our gains is just a side effect of how well we follow our process. And with that being said, you need to be attached to that trading process rather than your P&L. If you're always focusing on your account growth, you won't grow your account because all you're focusing on is doing random stuff to get that number higher. What you should be focusing on is, did I buy a bull flag today? Did my plan line up and I followed my process? And if I did, you need to reward yourself, and then over time, it will lead to a green account. Now, something that people don't talk about are red trades. I mean, it happens, right? Let me tell you something. It will happen. Not every day will be a profitable day. It won't happen. Know that in trading, you will take losses. It's a part of what we do. You not taking losses in trading is like Muhammad Ali stepping in the ring. He was one of the greatest and not getting hit. He got hit. He got hit a lot, actually. It's just a part of what we do.
Sorry, X, if I can just piggyback off that.
Hell yeah.
Taking losses is part of what we do, but I want to go ahead and stress the importance of being an active loser, right? And what I mean by that, being an active loser is you're setting a physical limit. Hey, if this goes 10%, I'm cutting it no matter what. Or if this goes 15% or 20%, whatever the level is for your risk profile, be an active loser. Don't mentally say, hey, if this goes down 15%, I'm going to cut it, and then never cut it. And then it continues to bleed and bleed and bleed. That's being a passive loser. And you'll lose so much money being a passive loser as opposed to just being an active loser. You'll save your trading account and you'll be in the game so much longer if you're an active loser.
And I like that too. So being an active loser, also while if you are active while this is happening, every loss that you do take, don't look at it as like, oh, it fucking suck. This sucked, right? You should look at it as an opportunity for you to learn and improve that trading plan so that you can be profitable. Your goal in trading and your trading career is to get to a point that when you get losses, it begins to inform you instead of crushing your spirit. because when you start losing, it crushes your spirit. What happens is you get gun shy, and once you get gun shy, you start making all kinds of mistakes and missing moves. And if you find yourself so emotional with your position and your tradings, that just means you risk so much, right? I had a student that had 100K, and he was very profitable, but he never risked more than 2,500 because that was his risk profile. So you guys have to find a fine mean of how much you're comfortable with risking. Now, when you take a loss, it's very stable. It's very important to keep a stable mind. In the beginning, when you take a loss, the only thing you're going to think is, how can I get that money back? You take a $600 loss, right it open. You're going to say to yourself, I have 8 hours in this rest of this day to trade and get this money back. So you start revenge trading, right? So what you need to do is keep that mind stable, because when you take a loss, oftentimes it's not only a financial one, it's an emotional scar, and this can cause you to lose balance in your mind and get you caught up in the reactivity, such as just buying random stuff to try to make that money back, and that leads to what I call revenge trading. This can also create what's known and what I like to call the fear of failure. After you take a couple of losses, you're scared to lose, so you won't hop in a trade. And when that happens, how you guys can avoid that is by doing three things: review and know what your strategy is seeking to achieve. Consider all the possible outcomes of your decisions, like what could go wrong, what's the best thing that can happen, what's the worst thing that can happen. Three, greatly reduce your trading size so that you can feel more comfortable of letting the trades work. Now, what does my trading plan seek to achieve? And if you guys do not have a trading plan, you either need to DM me or DM Blake over here, Trace Trader, Juicy Trades on Twitter, so that we can get you set up and get you established. Number one, what does your trading plan to seek to achieve? My plan seeks to achieve a 10 to 25% gain on a consistent rate, while at the same time I'm losing less than what I'm winning. Okay, so I'm winning bigger percentages and I have a higher win rate. And when I do lose, it's all about keeping that loss small. We profit from consistency, meaning that we take every trade with the same setup over and over to increase our chances of winning. You will win more than you lose this way, and when you do win, your percentage is bigger. So what happens is your P&L grows. And also, when you pull that trigger, you need to know, so that you don't have any FOMO or anything, all the possible outcomes. What could really go wrong? Well, the way we trade, the worst thing that should happen, because stuff that shouldn't happen happens sometimes. But the majority of the times, when we get stopped out, when it goes wrong, we get stopped out for our targeted loss. However, we know that we have the chance for unlimited potential if your trade pulls a Tesla, a Kodak, or whatever it may be. That's not going to be every time, though. So basically what I want you to take from this slide is know your risk before you pull that trigger. All right.
Also, visualize the exit before your entry. Same thing.
Exactly. Now, here's a pro tip. I want you guys to look at every one of your setups and say, what's wrong with the setup? If you can find one thing, I mean, literally any one thing, you don't take that trade. You only want to play with A plus setups. What this is going to do is going to make you trade a lot less, but you will trade higher probability setups, which will lead me to my next point. Trading less is making more, and trading with less is making more. So you do not need to trade every day. So don't be in a rush to try to do it. In trading, I just want you guys to think quality over quantity, and really, without that quality, you won't trade. So anybody with a small account, this is where I want you to pull out a pen and piece of paper right now. Okay, this is proof that trading less is more. Now, let's say you have 5K, right? Let's say you're going to wait for those. Remember that slide I just showed you guys with the repetition, all my trades look the same? You're going to wait for all that stuff to line up, which is taught in our program, and Blake teaches it in his program too as well. So it meshes both of us so that we can go ahead and get you set up. But you're going to wait for that. In real life, you're probably going to take 9 trades in a week, right? I mean, as a day trader, let's just be real, right? You're going to have some losses. So let's average it down to 3 small wins. So you got 5K, you got 3 trades. You're going to put $1,000 into your trade. Now, you risk $1,000, but you got 4K in cash. What that means is you can't blow up on one trade. So that gives you a longer term flexibility of trading over and over again. So let's just say you have a profit target of $200, that's 20%. You got 3 times a week, you got $600. Because that balance has increased, you're putting more into the trade, and because you're putting more into the trade, you're gaining more. Only 3 trades a week, you're now at 6K, right? Now you're here, you're putting 1,200 in your trade, you're making 300 per trade, that's 900 a week. You're at 7K, right? One thing I really want you to pay attention to is how this left column, this is growing rapidly, and this right column isn't growing as fast. I'm still not risking that much. I'm still not going all in. I'm not chasing, I'm taking it one trade at a time, 3 trades a week. Now at the end of the first week, I'm up 66%, right? Week 5 starts. You got 8K, same thing. Let's do one column and jump to the bottom for the sake of time. But you got 8K in your account. You put in about 16 in a trade. You're only targeting 475%. I mean, $475 3 times a week is this. So at the end of that, if you follow that method, at the end of 9 weeks, you're at 16K. We was just at 5K. All right. So let's just go ahead and jump down to the end result. In 12 weeks, 5K to 32K. That is ridiculous percentage return. And if you follow your rules, this is it. This is all trading is. It's waiting for those opportunities. So if it comes 3 times a week, you only trade 3 times a week. You don't need to trade every day. I want you guys to take that and put that in the back of your mind. Now, also, if you follow your rules, that's the successful side of trading. If you do not follow your rules, you need to do something that I learned at 7 Points Capital, which is called a corrective action. A corrective action is when you use your self-discipline to correct self-destructive habits. Anytime one rule is broken, you would now take the next 10 trades with one contract. If you have a small account, then you use a paper trading account and trade one contract on that paper trading. Why am I telling you to do this? There's 2 types of gains in trading, right? There's gains that you obtain from following your plan, and then the gains that you do and you get from not following your plan. Those kind of gains are losses because you did something that did not follow your trading plan and you were gratified for it because you made money. So what happens is down the road, you keep doing that same thing. Let's just say it was buying at open. Well, down the road, eventually it's not going to work because it doesn't follow your trading plan and you will wipe out. By you applying a corrective action, you weed out all the self-destructive habits and you will only have the habits of a professional trader. And this is what we preach and teach in our program.
So going into some of the essentials of trading, and before I get into that, Xavier said one thing that's really important. You don't have to trade every single day, and I don't trade every day. There's periods of time where I don't trade for a week, 2 weeks, and that's completely based upon my system. I trade uptrends. That's where I make my money. It's a pretty simple system, but it takes a lot of patience and it takes a lot of discipline. So one of the first essentials is patience. Next essential is give me a second here. Patience, discipline, risk management, focus, conviction, and finally being open-minded. I'm gonna run through all 3 of these here real quick and what they all mean. So patience, right? You hear a lot of people talk about patience. Well, what is patience? I personally think it's the most underrated attribute of any successful trader. So we need to have patience when the market isn't trending to do nothing. All right. So what I mean by this, I just said I make my money in uptrends. I have a system that defines when we enter an uptrend, and when that system defines that, I get long. It's literally as simple as that. But when the market is not trending and in no trend or a downtrend, I don't even trade downtrends, simply because over the general market overall is still in a bull market. So that's still a losing probability trade. If I want to try to short the market in a bull market, those odds are stacked against me. But if I'm going to take a swing long in a bull market, in a fresh uptrend, well, damn, all of a sudden I got some odds in my favor. But it takes a lot of discipline and patience to wait for the market for those market to set up in that environment. You got to have patience in the trade as well. So you got to allow yourself enough time for the trade to work or not work. So this is going back to investment time horizon and planning your trade. If you go ahead and you enter a Tesla November call or December call and you're already in the money, $10, and as Tesla's moved $5 to the downside, but we're still trending in an uptrend. Well, it hasn't violated any of my rules. I should probably see if this trade wants to work. I'm down right now, but hasn't really violated any rules yet, and price hasn't told me that it's bearish. So I'm going to be patient and I'm going to sit it out. That's taken a lot of patience and also a lot of discipline and conviction, which is another essential. Patience to hold as long as the trade, as long as it's still working and price tells you to hold, like I just talked about. And then patience to wait for your favorite setups, like Juicy's talking about, like Xavier's talking about, waiting for the A+ setups. In my system, it's 8, 9, and 10 star setups. And it takes a lot of patience for that. So going over to discipline, discipline goes right along with patience. Anybody who follows me and my team know that these are two words that are out of my mouth probably too often, but it's absolutely an essential. And I gave you the example for your health and fitness, right? If you don't have the discipline to take care of your health on a daily basis, if that's one of your goals, then you're likely not going to have the discipline to stick to a trading plan. So we need to have discipline to hold so long as price rules aren't violated, discipline to scale profits. In my system, we get in early on the trend, we load up early on the trend, and when price starts to move in our favor, we sell half and then we move up our stops. So we lock in profit and then reduce risk exposure. So scaling profits as price moves in your favor, discipline to plan your exit before you enter the trade. So this is visualizing your exit before you get into the trade, understanding all of the risks that are associated with that trade, understanding where you are in the trend of the broad market and the general market and the stock that you're trading. Are you fresh early in the trend, or is this just now, coming to its end? Discipline to follow your trade plan. Okay, this is one thing Xavier and I, this is really why we are successful. It's because we do follow our trade plan, and it does take a lot of discipline and self-reflection to make sure that we're staying true to what our rules are, and not cowboy trading. And cowboy trading is, like I said, trading outside of your personal trade plan. So speculation plays, being over leveraged, having too much risk, trading, having the FOMO trades, the FOMO, it's part of cowboy trading. You see a stock moving and everybody's on this stock and, it's moving so fast. And if you could just hop in it for, a couple candles, no, that's cowboy trading. Okay. Stick to your plan, stick to what works, and have the discipline to stick to that plan. Risk management, we could probably do a whole segment on risk management, but we're going to fly through this today. You have to understand that the markets are constantly changing. So as the market changes, you're going to have different risks that are associated with that change. So you're always going to have to be thinking about how much risk you have on in that point of time in the market. And one of the things that you have to consider is your position size, right? Like if you've got a $10,000 account and you've got 9,500 tied up in Tesla options that expire next week, well, that's probably not the best way that you should be managing risk. You can blow your account up that way. You need to manage risk by securing profits. Okay, so like I just said, in our system, we get in early in trends and then we scale profits when the trend starts to develop. That takes a lot of risk out of the equation as well. So if I start with 10 contracts and price moves and I sell half, so now I'm down to 5 contracts. So I've taken half of that risk off the table. I've secured profits already. And then typically what I do if I'm trading futures is I'll move my stop up to my entry point. So I literally have no risk left on the table. So if the market wants to run, it can run. I can go play basketball. I can go to the gym. I can do whatever I want to do. And as long as I got my stop in, I'm fine. I'm managing my risk. And one of the most important factors to risk is stock selection. So you want to be picking the strongest momentum stocks in uptrends versus laggards, right? Right now, you don't want to be trading oil. You don't want to be trading, stuff like that. You want to be trading the high momentum names. Always set a physical worst case scenario stop loss on every trade. It's one of the things that I always do. Now, when I enter a trade, I look for a pivot level that I know that if price moves below this level or above, depending on if I'm long or short, but if price breaches this level from a technical perspective, from a price structure perspective, all opinions aside, it will tell me that, I was wrong and I should probably get out. So when I set that hard stop loss, that's the worst case scenario. That doesn't necessarily mean that that's where I'm going to sell, right? That's just the worst case scenario. So just because you have a hard stop in doesn't mean that that's where, you're going to lose your money. And also you got to understand derivatives and leveraged assets. If you're trading options, you need to understand those risks associated with those options. There's time decay, there's intrinsic value, there's all different, there's theta, all types of different Greeks that can really mess with your options. And then also leveraged assets. So your FNGUs, your TQQQ, futures. So you really need to understand all those risks associated with that. So the next one we have up here is focus. Like I said, you're playing against the best in the world. You better bring your A game. You better, give yourself some time to put into study and give your attention and focus to winning. So one of the things that I like to do, especially for people that come onto my team that are new, is I ask them, hey, narrow your focus. And what I mean by that is just start off by watching the SPY and the QQQ. Watch the indexes. You don't need to be getting too crazy trying to, trade test the calls or trade whatever it may be. If you're new to this, I guarantee by narrowing your focus and focusing on the indexes, which are the broader market, you yourself will become more disciplined and more successful in your trading, because it's a lot easier to, I don't want to say guess, but take a risk adjusted position on something like the market as opposed to a stock that acts within that market, right? It's a lot easier to judge the flow of the river as opposed to what one little jetty is going to do. So focus on executing the plan, right? Not your P&L. Like Xavier says, don't look at your profit and loss. Execute the trading plan. Know what your plan is. Focus on price. So price, in my opinion, I don't really watch the news. I don't have CNBC on. I don't have Twitter on. I don't have StockTwits on, because all of those opinions, all the sentiment, all the news is going to be represented in price. So if price is moving up, that tells you that, hey, either there's good news or there's good sentiment or whatever it may be, right? It's going to be baked into price. You need to tune out the noise. Like I said, take all the stuff out, take all the Twitter and all that stuff out. Next, we have conviction. And this comes from having a process that you trust and having some experience and some skin in the game from a process that's worked for you. Okay, so that's going to develop your trade plan. So one of the things that, I talk about conviction, you need to know that, hey, this trade setup works X% of the time. And, I know that if I get at this entry, I have a 80% probability that I'm going to make money on this trade. That's conviction. Okay. And you're going to need that when the market starts to throw you some curveballs, because you're going to need some conviction to know that, hey, this is what Blake was talking about. They're shaking the tree, right? Am I still holding the 10 MA? Okay. Am I still in the uptrend? All right. So I'm going to stick to this trade plan. You need that conviction. You develop conviction after years of success and being consistent, but it takes all 6 essentials to become consistently profitable. Finally, being open-minded, going back to Bruce Lee, be formless. So don't have an opinion, right? Go with the flow of the market. Market conditions change, and you need to be able to change and adapt with these, right? Every single moment in the market is unique. There's never any other moment like that when those exact market participants are playing with that exact risk, with that exact perspective. Every single market moment is unique, and every single moment presents different risks. So you need to be able to adapt to that. And having an open mind creates the space needed to formulate plans to react to price structure. All right. So you got to keep that open mind. Don't have an opinion. If price is telling you that, hey, man, you are wrong, you should probably get out and or short this, that's what that is. That's what that means. But you need an open mind. It's required because nothing works 100% of the time. It's that simple. Well, that really concludes our presentation. I hope you guys were able to take some of this information and, take some notes. I think we covered some very valuable topics. Xavier and I are both, very active on Twitter. So we have both of our handles listed here. I'm Blake. This is at Trade Tracer, and Xavier is at Real Juicy Trades. But I think, Xavier, if you want to have a couple words, maybe we'll open up for a discussion.
Yeah, let's go ahead and get into questions. But again, just like I was saying, one of the best things you guys can do is to follow both of us. All right, we put out a lot of content, not just to put it out, to actually help you guys uh, trade. So I give out swing trade ideas. I do it all on my Twitter. Follow us on Twitter. And if you guys can just do us both a favor, like this free webinar we just did, we will continue to make more if you guys go on Twitter and give us feedback, comment, and tag both of us and say you was here and you liked the webinar. But besides that, let's go ahead and open this up to some questions here. Give me 1 second. So I'm just read through the chat. Anybody talking? If you have any questions, please go ahead and comment now. Let's see, just right the trend. So I'm not seeing anything yet. I'm just going through all these messages. Is it possible to put up a cheat sheet for trade setups? Um, Vinny, if you're a part of my team, all you need to do is go through the trading playbook. At the bottom of the trading playbooks, all the setups you need. I will post the playbook in the Learn Grow Profit channel for you. Do you happen to use momentum scanners as a part of your strategy? Me personally, me and a very good friend and teammate of mine, we are working on a proprietary scanner for both of us. It's in back test right now, but so far it's proven to be essential and great, honestly. So we're just going to keep playing with it for now and get a couple more trades under his belt before we make it available to the public.
Yeah, and I'm a little more traditional. I have a set stock watch list that I trade. So I like I said, narrow your focus and stay in your lane. I mean, that's my lane. And thankfully most of the names that I do trade are the high momentum stocks.
And just to tag on along with Blake just said there too, you guys don't need to trade everything, because trading Tesla is not like trading Apple, right? And trading Amazon isn't like trading INO. So find a stock that you guys like, and I like to have a main trade list, a main tickers that you trade. The only purpose for the scanner is just like on a choppy day, and you see something like Peton, it just ran um, primarily. Um, this is for both of us here. He says, do you guys primarily day trade or swing trade or position? Me personally, I day trade. It depends on the market. I am both an active day and swing trader, but right now we've seen a lot of chop. So I've been day trading more often and taking gains quicker and cutting losses even faster when I usually do. And now when I swing, I've dialed my position size back a bit just because of the tape isn't as clean as we would like. And I guess he's asking you the same question too, Blake.
Yeah, so for me, my bread and butter is swing trading. So, when the like I said, when the market goes into uptrend, that's typically when we make our money. But if you haven't, if you don't know, I do come from a day trading background. So I am active both. Honestly, most of my positions lately, similar to Xavier, have been day trades. But when I day trade, once again, narrowed focused, the only thing that I day trade is either the NASDAQ futures or the S&P futures. So I won't day trade any stocks or anything like that because I can still get just as much, if not more leverage with futures contracts without the theta decay. So that's typically why I'll just do futures. And also it gives me the flexibility for overnight positions. So for example, if I'm holding, calls and the market tanks overnight, I can't get out, right? But if I'm trading futures and the market, and Globex, which is, overnight, and Globex, if it starts to, sell off, I can get out and or short if I want to. So it just gives me a lot more flexibility with my risk tolerance and how I manage risk. So yeah, the only things that I day trade are futures, and then my swing trades. Typically, my starter positions will be the index. So the first positions I take in an uptrend will likely be a TQQQ call. Like that, that's what it is for me. So that system has worked. And yeah, so bread and butter is swing trading. Lately, it's been a lot of day trades, and when those day trades, it's just futures.
Next question. I guess it's going to be due to both of us. With market volatility due to elections, how do we set up our mind for leaps which are at least 2 to 3 months out after election? So me personally, at this point in this stage in the market, if I'm not in a leap already, I'm not looking to get into one
Totally agree with you, Xavier.
into after election. Okay. Now, if you are in a leap, nothing changed. I noticed some chop here. Forget the noise. Pay attention to the price. All right,
Yep.
and if you're looking at leaps, you should be looking at day by day. You're looking at these day chart candles. Adjust your stop, raise that stop. You get stopped out, you take a loss. You get stopped out for a gain, you take the gain. But just know these next 2 weeks are going to be. I think we're going to be range bound into
Yeah.
election. And with that being said, just expect chop and get your day trades, get them in and out. And if you're a swing trader, just be patient. Like Blake was saying, here go a week, 2 weeks without trading. This might be the 2 weeks you go without trading. But with that being said, yeah, that's it. Did you want to add on to that?
Yeah, no, man, you pretty much said it. I'm not looking to initiate any new, you know, long positions that are I'm planning on holding for more than a week, honestly, just because of where we are right now in the market. So if I was currently in a leap, like Xavier said, nothing's changed. Watch the tape, watch price, set your stops, make sure that you're taking profits on the way up. It's pretty much as simple as that.
Yeah. So iPhone says, do you guys, well, this is both of us, teach futures trading? And what I like to say about that, I do trade futures, and I trade futures across the board: oil, gas, markets, whatever it is. The one thing I want to tell you is a trading system should be able to be applied in anything. So if I teach you a setup, let's just say it's a bull flag, you can go trade that on Forex, options, the stock, whatever it may be. So I do teach about futures, but I mainly focus on teaching buying and selling. You can apply that to anything with a ticker.
Yeah, and similar to Xavier, my system is designed to give ultimate flexibility to my subscribers. So if you're a day trader or you're a swing trader, you're a buy hold investor, whatever your scenario is, there's something for you. So my system is broken down into two silos. First silo is really designed for the long-term investor, somebody who might not want to take their money to a financial advisor because they don't want to pay them the commission, or they don't know what they're doing with their money, or maybe they just want to, try to manage their money themselves. So there's that aspect of it. And I provide a model portfolio as to how I am personally invested in my investment account. And then I also have my trading account, which is really designed for options traders. So if you're an options trader, you can use it as an options, or if you're just a common stock trader as well, it'll work just probably, if not even better, because you're not going to have the risk of your options decaying. As far as futures are concerned, I don't teach about futures. I've had some students of mine where I've given them individual consultations, but it's not something where I have developed a system to teach about futures. But just like Xavier said, the same principles and the same process applies across the board, whatever we're trading.
All right. I put out a note saying last call for Q&A, but this has been great. It looks like you guys are out of questions. Again, if you guys can show your support, go on both of our Twitters and just leave a comment, give a like, let people know you were here, and we can get that and get enough of that. We will continue to do these free webinars together, and we will help you grow. Besides that, I leave you with nothing else. If you guys have any questions at all, please feel free to DM myself or Blake, and we'll happily reach out to you. Blake, if you want to say anything to him now, or
Yeah. Yeah, I just want to say thanks again for hopping on. Xavier and I will definitely do this again as long as we have your guys' support. One of the ways you can support us is, like you said, go follow us on Twitter and shoot us a DM and say, hey, I liked your guys' Zoom call, or hey, I thought it was shit. So just let us know.
all right, guys. Will you guys be easy? And